I'd like to greet you guys at the top of the morning, and welcome back to another episode of WealthWiseGuru. And I'm your host, John Shaft. And it is Monday, March 17, 2025. First day of trading of the week. And we are an hour, a little over an hour on the other side of the bell. During pre-market, we was up quite a bit. Matter of fact, we was investing $19,000, and since then it has declined and went into the red zone. So actually, this morning we're down $342. During pre-market, we was up by $500, $600, $700, $800, something like that. We have a buying power this morning of $3,116.78. And so let's get into the morning brief. The U.S. stock market is facing volatility today due to the economic uncertainties and the up-and-coming Federal Reserve meetings. Today, the market is experiencing fluctuation as investors' segment is tempered by the economic and political uncertainties. Key things include concerns over new tariffs from the Trump administration and fears of the potential U.S. Recession, as highlighted by Treasury Secretary Scott Bessent. Economic data releases such as February retail sales and home builders' confidence are also under scrutiny with Atlanta Fed's GDP and now models updating contractions estimates and corporate news. Technology stocks are mixed with Tesla seeing decline while Nvidia shows slight gains. Overall, sectors like technology are under pressure, while commodities like gold and oil are performing better amid economic concerns. And we got the up and coming Federal Reserve meeting, which is 3/18. The Fed's policies setting meetings will be crucial as investors await the insights on interest rates and economic projections, which could significantly influence market segments. Retail sales data. The releases of February retail sales figures is more important as it provides insights into consumer spending trends and key drivers economic growth. And on 3/22, you got home builders confidence index. This index will shed light on the housing market health, impacting related sectors and overall economic outlook. In the U.S. stock market, futures edge lower amid market corrections. Comments. U.S. stock futures dip as Scott Bezos suggested that the market correction are healthy. This segment reflects ongoing concerns about market stability and investors' confidence. The S&P 500 and NASDAQ extended losing streaks. The S&P 500 and NASDAQ continue to decline, marking a fourth week of losses, while the Dow Jones saw slight gains. This trend is highlights the ongoing volatilities in the market amid economic uncertainties. Intel and AMD gain on positive developments. Intel and Advanced Micro Device AMD experienced significant gains following positive news, including Intel new CEO appointment. This development is crucial to the investor segment of the tech sector. So that's going to do it for your morning brief. And let's take a look at the portfolio this morning. I have a penny option in place here, placed up on Palantir Technology. And it is dated for expiration date 3/20/2026. So let's look at this. It has a delta of 57.20. Has a chance of profit of 22.23%. Volatility of 68. Volume of 2, and open interest of 924. So simply what I did is, let's see, we can view. Okay. Simply what I did, I hit let's see, let's just go to Palantir. Let's see. Go to Palantir Technology. Do it that way. Well, simply what I did is when I went to Palantir Technology, and as you can see, the stock is way undervalued, simply because of the government cutbacks. The company is in its own right here still is performing as well as it always have done. It's just that they have tremendous amount of government contracts, and since the government has downsized, and so it also affect Palantir Technology stocks, because Palantir has a lot of government contracts. So simply, this is trading at this morning at 86.26. And so it should be way over, probably like $100 and some dollars stock. So I hit trade options. Then we go out to a year, which is going to be a leap year, because it's a leap. It's a year, at least a year out. It's going to be a leap. And so we're going to go to March 2026. We're going to buy a call. And then we're going to scroll down till the share price starts to move up. Okay, there it is. That moved up. And so a year from now, we're predicting that this stock is going to get back up to 100, at least 100. So we click on that 100. It's a 57.26 delta. A theta of 0.347. Chance of profit 22.16. Volume of 2. Open interest of 9.24. Volatility of 68.52. So you just simply click buy, and you put your 1 there, and then you put your limiting price. He is already highlighted 2020. And we go down here and hit our break-even stats. And this area here is insignificant. And this area here is your losses. So you're only paying $20.24 for this, so you can only lose what you're paying. And this is your profit. Probably gonna go to unlimited. Yep. And so you click on review. And since I already had this particular strategy already in place, but it's going to cost you $2,000. So I'm gonna say, yeah, it's going to cost you about $2,000 to implement this particular strategy. And this is a one-off opportunity that I have. Palantir in your portfolio, and this gives you by you putting an option in on this particular company, it gives you control over 100 shares of this company. Instead of just one share, you have control over 100 shares. There are 100 shares in a option. And so it gives you control over those 100 shares instead of just one share when you do option trading. And if you cannot, you do not have $2,000 to do that, just simply go and buy yourself one share in this particular company. Just go and click buy, and just go and buy yourself one share. One share costs you $85.70. So don't let you not having the ability to purchase an option for $2,000 stop you from investing. Just buy one share, or 2 shares, or 3 shares, and it's only cost you $85.74. Or you can hit trade. You can hit trade buy. Let's see, an option. You can hit trade and you trade option, and you can go out to let's see. This is March the 17th, I believe. You can go out to May. Obviously May. You can go out to April, or either May, either June. Just say, for instance, you went out 30 days, April the 17th. And this is also an excellent way to build up a small portfolio. Doesn't cost that much money. You click on buy and call. And then we're going to go around here and just look at this at the call me. You think it's going to, well, actually, you click on sell and call. The current market striking point for today is 85.67. So we're going to click on 90 and see what that looks like. That gives us a 45 delta, a theta of 0.1156. Chance of profit is 72.75%. That's a volume of 12.29. Open interest of 422. Has a volatility of 70.46. So we just simply gonna put that hit the add sign. It's gonna be $5.30. So this means 100 shares in this particular option. That $5.30 is gonna equal to 530. And then we're gonna go back to the top here. And we're gonna click buy and call, and we're gonna be going a leg up and adding to it. We're gonna hit that one, add that to it. Then we're gonna go back and hit sales again. This time we're gonna hit put. This is current striking point here. We'll hit that. Look at that and see that gives us a 42 delta. Chance of profit of 63.61. Volume of 691. Open interest of 6,367. Volatility of 71.55. And so we're going to be adding to it, and we're going to hit the plus sign. We're going to go back up top, and we're going to hit buy. Okay. And then we're going to go a leg down below it and hit that plus sign. And then we're going to hit this, and this is what you call an iron corridor. Like I said, you can implement this on many strategies. And let's look at the break even analysis from the black dot to the red dot. It's your losses for one leg, which is $145. This area here is insignificant. From the black dot on the other leg, it's $145. This leg is insignificant. From the black dot to the green dot is your profit. From that leg is $360. That area up there on top is insignificant. Then from the black dot to the green dot on this side, it's also $360. So let's buy $700 some dollars profit. You hit review, and then you put your if you want to double your profit instead of hitting one, you can hit two. If you hit two, now your profit is $760. Or if you hit three, it's even more. Then you go up here and then you put your limiting price in. Here it's highlighted at $3.83. So we're gonna go $3.55. We want to say it's high likelihood. Max profit is up. This particular strategy will be $1,065. So you will hit review, and in this case, it's going to cost me $1,500 in collateral in order to implement this particular strategy. The limiting price of it is $3.55. And so yeah, I'm not going to implement this right now, but I'm just trying to show you guys how, even if you do not have enough profit to cover a full price of a stock, or whether it be an option or just a regular equity trading, you can still buy into that particular stock. And this is $3.55. I got an estimated credit here of $1,064.52, and I got a whole collateral of $1,500. So. So don't let that stop you just because you may not have the full price of a stock to invest. You can still come up with other methods and get that stock in your portfolio as well. My stock value this morning is at $60,528. Is down. It's about $645. Pre-market, it was up to 61 and something, or 61,000. Well, since then, it has kind of lost value. So what's going on? Look at let's see. It's AMD. You can't go wrong with having AMD in your portfolio. I have 3.9 shares of AMD. Value at $419. And you have to excuse me, I'm still under the weather. Market stocks is down this morning about $1.22. I have a market value of 1.27 shares, market value of $491. See, S&P this morning. It's up this morning, trading at $563.95. 1.3 shares, value at $764.94. NVIDIA does in the red this morning. It's trading at $118.99, with the value just down $2.60. My position, I have 124 shares. Market value of $14,792. So far, it's negative this morning. Negative total, as you can see. See, NASDAQ, I have a 4.8 position of NASDAQ. Market value of $359. It's trading at $74.44. Let's see. If I want to. The Dow is trading at $37.54. I had 2.7 shares of the Dow, valued at just over $105. So I don't have much of it. Palantir's entered into the red column. It's down 58 cents. Value at we're trading at 85.74.73. My position here, I have 110 shares of it. Value at $9,433. And let's see, so far it's in the red also. It's down by 1 cent, trading at $12.08. I currently have 147 shares of so far. Market value of just $1,600. If you go on down past your past the stocks that you have in your portfolio, if you have Robinhood, it gives you your next up. You'll be your personalized profit and losses, and this is mine, profit and losses for the year. And going down further, and gives you what else I have in my list. And last but not least is futures. One thing about futures is futures is a form of day trading, just like day trading. But if you have a margin account, then your margin rule of trading 3 days with futures, trading 3 days limit with a day trade is non and void or insignificant when you're doing futures accounts, futures shares trading. You can trade as often as you want, no matter the margin rule does not count when it comes to futures. So let's look at the macro crude oil future trading at 67.35. It's up this morning by 17 cents. This required a margin up front of $910.14. So if you want to trade this particular future, and for me the best time I trade futures at late at night or really early in the morning. That way it gives you a better a better outlook about, it's like it reset itself. Like this time of day, again, excuse me. Like this time of day, you just kind of like a speculating where it's going to move. And if you want to do that, that's fine too. But look at these numbers that you see popping up on the screen on your right here. You got 14, you got 16, 13, 10, 11, 16. These are all strategies that people have put in place on this particular future. So if you want to say you want to go right here, 6746, you got 16 people. And so you will click on buy, and hold on. Okay, yeah. So you will click on buy, and let's see. Well, actually, you could what you could do is even better way is actually, you can click on buy here. And you put your one in. And it's going to cost you $911.16. After you click on buy and you put that into the system, and then this is accepted. And then what you want to do is to go back to trade and go to the ladder. And then what you want to do is put your sales stop in, and you do that by clicking a number up that you see you might be satisfied with, and then you click on sell, and then this will when the stock share price reach this particular point, it'll automatically sell without you doing anything. And then all you have to do is just look for it in your portfolio. This way you don't have to be sitting here watching it all day long, trying to see what it's doing. You can also do the same thing with buy. If you want to wait to a particular level you want to buy at it, you just click on buy and do the same thing. And this particular method or strategy will be good throughout today. And again, you're going to have like $910.14 margin to cover this particular strategy. Okay, that's what I'm bringing into today's video. I'm about to lose my voice. Still nursing this cold. Hopefully I said something and I taught you guys something, how to invest in the market. Hopefully I can help you out in some kind of way. The market is still down. Portfolio is still down some more by $387. And we're trading at 18.65. So until the end, may all your trades be a good one. If nothing else significant happens today, then I will just see you guys again on Tuesday morning at the opening of the bell. Until the end, may all your trades be a good one. Have a good, blessed day.